Good afternoon and welcome to another free trading tip from Learn Futures Trading. Today is January 17th, 2012, and today's tip focuses on divergence and market internals. As you can see, I have three charts. Top chart is a 1-minute chart of the S&P 500, the ES contract. The middle chart is the New York Stock Exchange advancing issues, and the lower chart, we have a 1-minute chart of the New York Stock Exchange ticks. The market internals are important for gauging market direct. If the ADD is above 1,000 or 1,500, we have an uptrend. As we can see this morning, the ADD stayed above 1,100. Now let's look at the ticks. Generally, if the ticks are positive, it's a sign of an uptrend, and if the ticks are negative, is generally a sign of a downtrend. Now key levels, usually plus 500, minus 500. Anything below between plus 500 and negative 500 is usually noise on the ticks. So we can see this morning we had a choppy to negative trend on the ticks. So in summary, ticks were choppy to negative. Advanced decline line was positive but decreasing. So we've seen a divergence between these two market internals. Generally they are correlated. And we saw the market sell off. But the sell-off was not a strong sell-off. It was a weak, slow, grinding sell-off. So what do we need to look for? We need to look for correlations in the market. If we see that the internals are correlated and that the internals also correlate with the index that we're trading, if we see a correlation between market internals and the index, then generally that trend will remain in effect. This morning, when we saw that the market was slow and the internals were not correlated, it was a warning sign to be very cautious trading, that there was indecision, price action is very slow, our trading decreases in probability. We have less chance of being correct on the trend and the trend lasting. So in summary, we want to pick a trend and make sure that there is a correlation and support to our trend. If we have a trend and support to our trend from the market internals, and we have a higher probability trade. This has been Learn Trading Futures for another free trading video tip.